Good evening, traders. It's Mark here from the DayTrading Room. Time is coming up to 8:30 in the evening, London time, on a Sunday evening. Hope you've all had a very enjoyable weekend, or having an enjoyable weekend wherever you are in the world. And just reviewing really what was an absolutely crazy, volatile, wild, swinging week. My last video I talked about how I let in my expectations and prediction cloud that opening drive trade. I think since then we've had five trading days, so probably a little bit late with the video, but if I'm 100% honest with you, when I was reviewing my trades for the day, after a really busy day, I didn't feel like putting up a video. So what I'm going to do this evening is just basically pick and choose a few trades from last week, a couple of good ones and a couple of ones that I just got wrong, just for my own reference, really, just to see what I did well, what I did badly. And last week for me was one of the best weeks I've had for a while. Loads of opportunities, lots of trades, maybe too many. Looking to scale that back a little bit this week, but perhaps we won't get the volatility as much. Did I make mistakes? Yes, lots of them. Lots of them. Losing trades? Yes, lots. Bad entries? Yeah, made all the mistakes. Made all the mistakes, but none of them were every single one of those is to be expected. You know, trading is not a flawless business. You are going to make mistakes, and I allow myself to make mistakes as long as they aren't mistakes that are causing significant damage to your account or to your trading confidence. You're never going to get everything right. So what I'm going to do for this video is I'm going to run through a few trades, really. Talk about some of the great ones that I took throughout the last week. I pick and choose a few, and also going to run through a couple of just bad ones, really, just misreads. Although, hindsight, I look back on them and think, okay, actually at the time it looked quite good, but take a stop, you move on to the next trade, and never let one trade hurt you. So I just want to talk about this actually very, very briefly. And this was a strange old affair. What day was this? I think this was the Monday. We had Rule 48 in place. Now, Rule 48, as far as I'm aware, I mean, I'm not an expert on the New York Stock Exchange rules regulations, but I believe it means that there's no requirement for an opening indication price for any stocks on the New York Stock Exchange to allow for a quick, fast opening. So we got this really odd situation where let me just get a drawing pen out here, where we had ticks were just hammering lower, but futures were driving higher. Now, logically, you'd think, oh, what's actually happening there? Now, unless there's one or two particular overweight stocks in the Dow, I know the Dow's a bit of an odd index in terms of weighting, but unless that's the situation, it was happening with the S&P as well. You wonder why, when stocks are being hit on the bid, is the price going up? Now, this is just literally a theory for me. I assume that because it was so volatile and because we had Rule 48 in place, that no one was aware of the potential opening prices until they opened. So there may have been an arbitrage opportunity for traders seeing when the prices opened, which was a place they didn't know until it actually opened. They had no foresight for that, and then bringing those into line by selling stocks and obviously buying futures to arb that out. I may be well off the mark there. I may be completely wrong. As I say, I'm not an expert in this sort of thing. I just trade price action. That's my edge. I don't know the ins and outs of exchanges and stock rules and what have you. So if anyone's got any ideas on that, then send me an email. But that's what I think was going on there. But needless to say, I was a bit confused with that action. And for me, the ticks are a big tool that I use. So when I see that, I'm a little bit concerned. However, saying that, the drive was very, very, very firm, very strong, over 100-point drive. So I've got to buy a pullback. I've got to. I know there are people trapped in it. It doesn't matter where the position is. When you get a surprise move of any sort, up or down, there are people trapped, and more than likely, not all the time, and actually it's a couple of times we did get a V reversal, in a lot of places on the market, but a lot of times you're going to get a little pullback and then a continuation, a little pullback, continuation, and that's what I'm looking for. Looking for that little pause in tape, the little pullback, and it starts to go. I see the tape buyer, and my risk is then quantified. And the one thing I want to just say very, very quickly is, guys, I know a lot of people out there talking about not using stops and controlling risk with other means, but please just put a stop in, even if it's a wide stop, a catastrophe stop. At least stick that stop in. This market can just go anywhere, and especially if you're someone who suffers with deer in headlights syndrome. You plan on coming out at a stop level, the market runs through it, and you're still in the position. You got to get out, just get out. I don't think there's any other way of being sure that you're fully protected in this market without using some sort of stop. So anyway, back to the original setup. Yeah, so I've got to buy a pullback on this, even though the ticks aren't there. But one thing I did say to myself was, listen, I don't like these ticks. There's a good chance this can just slam down to lows here. I don't want to get caught in this, but I do think that there is one more push in it. So yeah, I bought that pullback and it worked out okay. No scaling for me, purely because I just didn't trust this down here. Didn't trust it. It was all a bit odd. Of course, we've got a gap up there to be filled as well, so it's a long way. But anything can happen in this market. So literally all out on that first impulse, and probably left quite a lot on the table there. But don't forget, we're talking, these are 50-point chunks. So even if you've got a little bit of a candle, you're talking 20, 30 points. So that was that day, really. This was the monster day, if you like. Well, there are quite a lot of monster days, and lots of other trades staying on the short side, just shorting little pops. As I said before, there's no need to complicate things. The ticks are just struggling. So there are opportunities if you're quick on the long side, but why not wait for the short side? Because you don't know how far that's going to run in your favor, especially when you've got the ticks on your side. So a lot of short side trades, apart from this one. And I actually bought at this level here. Now, I know people are going to be saying, okay, yeah, right, lower that move. Yeah, what made you buy there? So let me explain why. I've traded through bear markets and a lot of severe downside action, and one thing I've learned the hard way, I may add, I've been in this game long enough, I've made mistakes that have cost me money, is that you don't buy on a savage downtrend day unless you see capitulation or severe exhaustion. Capitulation is probably a better way of putting it. I know it's more akin to a longer time frame, but severe exhaustion. So I'm not looking to stand in front of a train. However, one of my methodologies, one of my strategies, you've seen from my other videos, is to look for exhaustion and flushes and fade that extreme emotion. But when you're talking a day which is so aggressive like this, it's very, very important you don't get involved. You don't start 1,000 ticks, because we had a numerous 1,000 ticks, and in fact, you've almost got to say, okay, I've got to look at the size of the candle here, the size of the candle, the volume of the move. And all through this point, I was commenting and saying, I haven't seen a panic move yet. This is all very controlled. Push to a slight new low, bounce. Slight new low, bounce. A little bit more here. This is where we started picking up. But still here, I haven't seen any capitulation. Even though those ticks were the lowest of the low, that volume bar isn't very big. More importantly, this is the thing that I like to see. I want to see one candle bigger than all the other candles I've seen for the last several hours. That's the important thing, because that's no pause. That's just drive, continual selling. It's no pausing for air. It's panic. It's squeezing the very last out. And so when I saw this here, and I saw this huge spike in volume, huge. This is relative speaking to the average volume around here. We're doing say 1,000 contracts on the YM, and then we spiked up to 2,500. That's what I'm talking about. We're plowing through levels, supports are just breaking, and then I see the pause in the tape. Now I got actually within 25 ticks for the low, which I consider a great trade. I know another guy who I trade with uses similar trading strategies who got pretty much the low tick within, I think within five to 10 ticks, which was hats off, great trade. But again, he's waiting for that capitulation, not standing in front of the train. He's waiting for the panic to be at its peak, using indicators of volume, looking at the tape, looking at the speed, looking at the size of the candle, and then in. So I'm in on there, and I'm alert. I'm now thinking, I'm expecting, if I've got this right, there to be a very aggressive bounce off that, very aggressive, and I'm not going to waste that opportunity. There's no point in taking that risk, which, okay, if we're honest, when I'm getting a trade and I'm 25 ticks off the low, I have to be using a 35 tick stop. I have to allow noise to allow it to flick, but not go below that low. So that's a lot of risk. But I believe that there's a lot available on the table. Now, of course, first impulse, I'm scaling off as we're starting to push up. Now, I still think that this is a trade to hold, and I actually thought that this could possibly be the low for several days. So thinking that, and knowing that I've got a cushion there, and now knowing that I don't want it to revisit that level, I can afford to manage that position, looking for longer term move. Now this was uncomfortable. There's no doubt about it, and I wasn't expecting that. And actually, this was a precursor for what was going to happen later. But true capitulation, you would get that, a little bit of an effort, and then the aggressive bounce starts in. I mean, I'd love to have some more examples to show you, but I didn't have time to go back and look through. But generally, if you get on the end, on the bottom of true capitulation, you've got a good trade lined up there, and you need to hold on to it. You don't need to let it go. Don't need to get shaken out. You don't need to. You know, you're in near the lows. Why get shaken out by even a 50-point downdraft? You don't need to do that. So for me, I was scaling. This was a lovely place to scale. Ticks are still low. Ticks are still low relatively. I say, listen, I want that high tick reading. I want to see this, trapping those shorts. And this was a little bit painful, I have to admit. We came back 100 points here, and I'd scaled out a lot of position, don't get me wrong, but I still had a fair amount on because I believed that I had a good part of the trade. And if that is true capitulation, the market should not revisit that level. And actually later on we did revisit, but this was really a hindsight of, this shouldn't be happening. It shouldn't. The bulls should really have taken complete charge and running that straight up. That move should have been really 45 minutes earlier, 15 minutes earlier. But anyway, I still thought the trade was okay. I thought, fine, I can have a stop at break even now. It's still a profitable trade because I've taken a lot off the table, some very nice profits off the table. But I'll stick with it. There's a chance here that this could run on. And actually, I was gonna take that off and show you. Where are we? I'll do it as I was gonna do it. And then I held on to it, and I'm looking for a place to exit now. I'm looking for a place to exit, and I'm looking for a place to take off the majority of the position. I was still holding a small bit of the position because I still think that there's possibility that this could run into the close. But why did I take it off? And I just took off the VWAP there, so I've given the game away now. But why did I take it off at this level? It's the higher that swing. No one, what made you do that, Mark? I hear you asking. It's a couple of things, and this is why I use the tools I use, because they guide me to my exit. Highest tick of the day. We had a lovely high tick reading there. 936. You've seen the VWAP. I was going to put that on, but VWAP right there. And finally, I'll just bring this in if I can. Dow Cash 11,100, and right back to that cluster there of support from earlier, now becoming resistance. There's no reason not to take off more of the position. In fact, the majority of the position, I did leave one on. And was subsequently trailed out, um, because I thought there was more mileage in it. But actually, what I did is, not to confuse people out there, but what I did is, because I thought that there was some downside in another account, I did take a short off that VWAP because it was so overstretched, and there was opportunity on the downside for some sort of retracement down. But that's by the by, really. Probably didn't need to mention that, but the important thing to me is holding that trade for that move, and okay, getting trailed out on that final, when it didn't really, when this didn't hold here, and we got this, and then this didn't hold here. It was out. I was out of the position. It was out of the position. So it wasn't an actual physical trading stop, if you like. It was more a case of, I just want to see now what happens on dips. What's the response to the market on dips? So anyway, moving on from that. So that was that trade, and really that was probably the trade of the week, in terms of just holding on and playing it well. And as I say, I did take a little short scalp in a separate account, only because it was so overstretched, and things don't just go up in a straight line. But that's by the by. The more important trade for me, aggressive trade for me, was this break here. The fact that we shouldn't be anywhere near down this capitulation point, we really shouldn't, and the fact that we did, and the fact that we broke hard, and the fact that we pulled back, already broke there, pulled back, couldn't get back up. It's just got to be worth a go, and it just cracked. It just absolutely cracked coming into the last 15. Unfortunately, I did scaling out. Had to stop at break even, thinking, this is the last 15 minutes. We're bound to get an absolute savaging into the close, but we didn't. Came back up and just pinged me out on that last bit. So it can't be perfect, and we did actually drive lower later, but ultimately great little trade. So that's that. We're coming up to 18 minutes in the video, and I'm going to skip that one, and I'm going to talk about which one should we go for? Very quickly, I'll just say why I was short on this opening here. I'm going to bring in a 24-hour chart and look at this. I was actually trading this pre-market a little bit small size because we just ground down. Every pop was sold. I was selling. It was very gappy, the book, so I was in light position. But it was lovely grind down, lovely downtrend, taking out support levels. It was after that mega pop day, so we had a lot to unwind, really, because that was quite an emotional pop. But this is why I went short at the open. Look, this was the push lower, and we hardly popped back up at all in relation to the last hour or so. It's nothing. So why would we assume the selling is going to stop? You already know that people are selling it, so why would we assume selling is going to stop? So as soon as I see some confirmation and a little pullback, and the ticks as well, let's not forget our friend the ticks, guys. They have been an absolute gift of an indicator, if you can call them that, the past week, apart from that odd spell there. So I'm on the opening drive there, and I'm taking a nice little short scalp. So let's move on quickly, finally, to the one that I messed up on, but actually worked out okay. Yeah, monster trend day. It was that day that we just chugged. I was looking to get long, and I was looking. Actually, this was nearly got along on this. I was looking to buy on the VWAP here, didn't go low enough and missed it. So pretty much missed a lot of the opportunity there. But anyway, end of the day, I'm thinking, okay, if there's some sort of pullback, I'm still waiting, watching this pullback. Please, I'd like to get long on this. We start to pull back. Great, I see it pull back. Let me just double check on my parameters. Okay, pull back. That's reasonably sharp, but okay, in hindsight, I'm looking at the volume here, thinking maybe should have had a red flag. But anyway, ticks are okay. They're not going too low. Yeah, I'll have a little long there. So there I buy, looking for a nice drive into the close. Bulls to keep on pushing. Promptly got stopped out in about, I think it was about 20 seconds. Clean out, bang. Had a catastrophe stop in, but my actual stop was on the trigger finger, if you like. As soon as it went through, bang, I'm out, and I'm reassessing. I think, okay, I'm out. I still like it as a long at that point. I still think, okay, if this actually wicks. Let me just take this off so we can see, we know what we're talking about now. If this point here, bear with me, get the pen. If this now wicks, this candle I'm looking at here, if that wicks and pushes back, great, I'm in, I'm on, I'm long, and there's my stop there. Risk quantified, looking for a probe to highs and then push into the close, panic buying. So I'm still thinking long. Yeah, I took a stop, but I've got to take a stop. I'm not going to sit with something like that. Why should I? Even if I have to get back in at a worse price, I will do. But then I realised that this was just actually bulls panicking. They were so frightened this thing was going to reverse on them that they were running for the door. Don't think anyone wanted to hold overnight. So we had quite a significant downdraft here. So what am I doing? I've now flipped my bias immediately because I'm seeing low ticks, I'm seeing volume coming in. I'm seeing, hang on, a lot of people probably did what I've done there and are trapped, and they're not as quick to get out. And you've got all these guys here thinking, hang on, that's been a nice day. Do we want? Should we cover? Should we get out and bank the gains? I think there probably were some people thinking that. So anyway, so I did what I have to do, and what I always do is when you get a surprise move, I'm looking for that first pullback. You got it, first pullback. Here we go, bang, came, and actually I made a bit of a mess of this. This is my mess up trade. I took some profits on the push down, and that's actually quite a nice profit. Don't forget the scale, which good. Very pleased with that. And we pushed back up, and of course it was just too much, and I just came out because I was just still concerned about the whole thing, just still a bit concerned. So really didn't make the most of that, at all. I think I hopped on for a little short scalp, but I'm not counting those in these videos, guys, because it's just scalping based on tape, and it doesn't, as far as I'm concerned, count. What matters is the actual setups. They're the ones that you can replicate in the real market, if you like, rather than the real volatile stuff where you can get away with scalping on the tape. So yeah, that's that. Did make a profit, did get a bit back from that stop out, great. But that was a trade that really made a mess of. But in hindsight, I'm happy to be buyer there. Happy to be a buyer. It paused. It looked okay. Maybe if I'd looked at the volume, I'd have thought twice about it. So yeah, interesting week. But as I say, one of my best weeks for a while. Really, really pleased. Some notes I've written, whether they're of interest to you or not. It's just basically these are based on comments and emails I've received, and the things I've said to people are: listen, reassess your risk management plan. You may well need to reduce size. You may well need to increase stops. Noise is a lot more. I don't know if this volatility is going to continue, but if it does, if you're a deer in the headlights type of person, stay out, or use a fixed stop. If you're someone who cancels stops, don't trade this thing, because this will take your account out if you get it wrong. And listen, you're going to get it wrong. Example there. I took a buy there, and it was a completely wrong thing to do. I took a stop. Do I like taking stops? No, I don't. But I know it's part of the game. It doesn't bother me one bit. No one likes to lose money, of course they don't. But I know that's part of the game. But look, if I'd have held on to that, it was around the 11,200. If I'd have held on to that, that's 110-point loss. If you're holding on in hope, that's not acceptable. Not acceptable for a day trader. So yeah. Please have a look at your risk management plan. Another thing I wanted to mention is, I know this video is getting long, so I do apologise for that. Don't judge your trading performance on last week's or last 2 weeks, whether that's good or bad. Don't judge your future trading performance, should I say. Maybe I've worded that a bit poorly. What I'm trying to say is, if you've had a bad week last week, don't worry about it. Don't think that you can never make it as a trader. Don't think that it's detrimental to your trading career, unless obviously you don't want it to have done damage to your account. But what I mean is, the volatility is so great. The market is unprecedented volatility. I've traded through a lot of volatile markets, and this is pretty much up there with the best of them. So if you struggled in a market like this, don't panic. It might have been the first market you've seen that's like this. It's not uncommon to try and trade it as you've been trading other markets and not switch phase quickly enough to take advantage of it, or lose money. So don't panic. And similarly, if you had a great week, don't start to extrapolate those results for every week. You've had a great week, say thank you very much. It's a nice boost to the account, and now I'm just going to just going to get on with the job, whether we get a volatility continuing, whether we get it dying off. I'm going to carry on making great trade after great trade. So if you, in summary on that, if you didn't do too well last week, don't panic. It shouldn't have a bearing on your trading overall. This is rare times. And if you did great last week, very well done. Well done for getting the opportunities that presented themselves, and just don't let it go to your head. What else did I put on here very quickly? Take it easy on the opening drive. Just watch out for the opening drive. As I said earlier, do not fade it. Do not fade it. If you're on it, hold it. Look for a good run. 100-point 15-minute opening drive is pretty much the norm at the moment. Although saying that, Friday obviously dropped off a little bit, but look at that. Learning to spot exhaustion. We talked about that. First thing I say to myself before every trading day: capital preservation number 1, then capital growth number 2. It's very important to preserve the capital, what you've got. You've got to take risk, obviously, to make money in this game, but unnecessary risk, unnecessary size, getting involved when you shouldn't be, cut that right back. Don't want to be doing that. So, and also the one thing for my own thing is that I need to be. I think if there's a lot of opportunity in the last hour or so, long lunch, if you need to refocus, come back and look for the last hour. However you like to structure your day, but I think there's opportunity in the last hour or two, if not all throughout the whole day. But give yourself a little bit of a break. I think when you look back, most people find that they're probably not making an awful lot of money at lunchtime net overall over their careers of trading, because it is choppy. Everyone's individual, everyone's different. People might thrive on that sort of thing, but I think you may find that you make some money, lose some money, and you're probably better off saving your energy for the better opportunities the next morning or in that afternoon. So got some other points there, but that'll do now. Come up to a 30-minute video, far too long. Those of you who are still with me, thanks for watching and listening. So as usual, please manage your risk, guys. Please. Hate to hear of stories of people getting caught out. I know it happens to people, but manage the risk, and we can avoid that sort of thing. Join the chat room. A lot of you signed up, haven't come in yet. Sometimes it's quiet. Sometimes we're not saying anything, focusing. Sometimes we're talking away, talking about the markets, whatever. You know how to get into that. And as always, email me, mark@thedaytradingroom.com. Any of your comments, welcome them, questions, etc. We're all here to learn, and we're all here to help each other. That's what the room's all about, and that's what really trying to strive to do. So good trading, guys. Enjoy your weekend. Let's look forward to a profitable week next week. I don't know what we've got in store for us. More volatility, perhaps. Maybe it'll ease off a bit and it'll go quiet, as possible too. But either way, we're looking to manage our risk and just looking to make the next good trade. Take care.